Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market sank last week as investors finally got tired. There was no shortages of excuses to sell during the week, or at least for the bulls to pull back at least and take their bids out of the market. There were certainly a number of things as trade jitters continued, as the president throughout the week threatened to put a lot more tariffs on China. Early in the week we heard 200 billion, and then late in the week we heard 267 billion, and China continuing to threaten they will retaliate. So the worst of the trade war may certainly be out there. While the Mexico deal got settled as far as NAFTA goes, Canada still does not have a deal, and they are still working on that. Also, Department of Justice had their fingers pointed at social media as Twitter's Dorsey and Facebook's Sandberg were on Capitol Hill, and they were testifying in front of Congress, and there were allegations that a lot of the information was slanted that was coming to users, as conservatives are really telling them that they have been trying to really make these elections look different based on their liberal slant, and that they are trying to stifle how the news is coming out to their users. So this is a big deal, and we've seen these stocks really take it, because the thing is that the prospect of a lot tighter regulations is out there, and of course that would really bother users. And there's been a lot of huge numbers coming out recently about the young people that are leaving Facebook. So those are really big deals, and that really weighed on the market and on the Nasdaq for sure. Of course, the Kavanaugh circus has gone on for days in here as the Supreme Court nominee got grilled by Democrats, and he will be confirmed no matter what is going on there, because the Republicans have enough votes. So it's just all formality, and it's been just absolutely wild. Overall, it was a rough week for the president, as the book came out that people had been warned was coming. That was Woodward's book, Fear, and that shows an incredibly ugly picture of the White House, whether you believe it or not. And then you really have to wonder about this op-ed that came out of the New York Times by an anonymous writer that essentially said that whoever that author was part of the resistance, and essentially an alternative governing body that was deciding which of the president's whims they were going to allow. And of course, I believe that the economy is simply run by the central bank. So anyway you look at it, you got to wonder how much influence the president really has. And if there's any truth to this, then you really have to be very concerned about who is running the country. And that is certainly bothering investors also. And just as an aside, cryptocurrencies had a crash. And I've got more coming on that in just a few minutes. So the stock market did show weakness this week, and as a technical analyst, I tend to be in the battle between what the technical numbers say, all of the indicators, and my gut, or what the bigger picture cycle analysis says. And there's been a conflict in there, because the technical numbers, the internals of the market, have been strong. And at the same time, the patterns have been warning that there was a peak coming. So I've been in a battle with that. And our stock index report, if you look at that, it's almost purely technical. So you'll get all those technical numbers, and we share our charts in there with all of our cyclical projections. So you want to get our stock index report, which comes out weekly. You can write me if you don't get that at slim@askSlim.com. So while that battle's going on, for me, what is apparently clear is that leadership, or the leadership that drove the market, specifically the Nasdaq stocks, are giving warnings, and they're really in bad shape as tech and social media puts on some very ugly patterns. I'm going to show you some of those when we get into the best and worst stocks for the week. And at the same time, the financials, they are weak, and the energies are weak, so you got to really wonder where the strength is going to be. And I did a video on Thursday that talks about that, defensive stocks and utilities and those things look like where money is going. And outside of the decline that we saw in bonds, a couple times this week, bond market has been stronger. So there's been money moving in a flight to safety. And I think that the message is very clear right now. Big money, investors that run these big funds, I think they're getting more defensive. And there's I think, a lot of value in focusing on that. I did spend a few weeks on the bull side back in August, and then started to turn cautious again. And now I am very cautious, and I think that there is a period of extreme risk in the market coming up. While we might get a little near-term choppy action, I think that sometime between late September and November is a period of extreme risk. In fact, I'm going to say right now that I think there's going to be some very big down days in there. I wouldn't be surprised to see a day come in or more of over 3% on the downside. So I think that's all going to be existing within a very significant correction, and I think that is beginning right now, though I think that the market will fight a little bit before it gives it up. Let's take a look here at the 60-minute chart of the S&P 500, with the gray area being the overnight trading and the white area being the trading that is during what we call the pit hours. So you could see Monday we were closed, of course, for Labor Day, but they did trade and got a little bit of a lift here over the overnight session, and then not much during that early session during the day. Tuesday came and market jitters came in as the trade war, or fear of the trade war, really picked up, and bonds fell pretty hard that day. And the market was down overnight. It tried to get a rally as Amazon rallied, and we hit that $1 trillion market cap in Amazon, and it churned back and forth. The market ended down for the day, but gave a good showing of it as it came back. Now, the market came back almost every single day after declining. You could see that each of these days was similar: decline and then rally back, and decline and then rally back, and Friday here trying to rally back here with a couple of hours to go. The Department of Justice came out with their investigation on social media right over here, if they stifle free exchange of views, and that testimony came. They sold them down early. The Nasdaq was down over 100, but then bounced back. Here on Thursday, China warned of retaliation if the president does impose those new tariffs, and the social media stocks fell very hard again, and Nasdaq was down at one point over 115, but then bounced back. Fed heads have been out these last few days of the week talking about higher interest rates, and they are facing the fact that growth numbers are starting to pick up and inflation is starting to pick up. Proof of that came actually on Friday. Trade tensions weighed on the markets early, but then we got a market that rallied back on some strong payroll numbers. But wages came out up 2.9% year over year. That's the strongest since 2009, and bonds fell 1 point on that news. Here, POTUS again came out on Friday with those threats, and the market, which was trying to rally, then settled back. You can see that channel that it's been trading down all week long since the market opened for real on Tuesday here, and we've been in this downward motion. So this has been a down week, as you can see. And the news certainly in the background bothering investors and giving them a good excuse to sell. Stock market for the week up to this point, with a couple hours to go, we see the S&P 500 down really about 1%. Not a big move in there, but the other indexes moving more significantly. Nasdaq about 1.5%. The Russell about 1.5%. The Nasdaq almost 3% to the downside, and the Dow Jones, which has some of those more defensive stocks in it, down only fractionally on the week. Bonds 30-year down about 1 1/3 points, a big jump in the 10-year yields, up about 8 basis points, as those growth numbers have really started to move to the upside, though there's a wide range. I see growth numbers between 2.5% and 4.7% for the quarter that we're in. Dollar was up small. The gold market very choppy, ends up losing about $5 on the week, and the oil market, on growing number of inventories, and this has been a choppy market in there, falls by $2.40. So that is the opening segment. What we have coming up is a couple of things. First of all, you're going to see a special video that was only for our members on cryptocurrencies with our analysis on there, and then we will come right back with the best and worst stocks for the week. So the next thing I want to talk about are cryptocurrencies and Bitcoin. The market in Bitcoin has moved has had a lot of volatility in the last couple of weeks. There has been a fairly sizable recovery in there, and then in the last 2 days, stimulated by the news at least says that Goldman Sachs has at least delayed or canceled the trading desk that they were putting on, and there's been all these delays in the cryptocurrency ETFs because they just don't align with the type of information that they provide or the backing that they provide that other ETFs do. So there's been a lot of struggle in there in getting that done, and all of a sudden there's another wave on the downside. The cryptocurrencies, there are it's now grown to about 1,700 of them. History will write that this equates with the great tulip bubble, well beyond maybe what the dot-com bubble was, because you didn't have 1,700 dot-com stocks, or maybe you got close to it, I think, as this is one of the great farces that I think has ever been played on investors. Don't talk to me about blockchain and tell me what how fantastic blockchain is and make a case for Bitcoin or cryptocurrencies. The technology is fantastic and it's going to be adopted across the world. New way to ledger things. Yes, I agree with that. Bitcoin, cryptocurrencies are built on that. However, they are essentially a measure of digital work. How long does it take to answer a very, very difficult question? And when they answer that, when the computer answers that very difficult question, they take another little step towards creating a Bitcoin or creating a cryptocurrency. So that is done by miners, and all of this so-called value that has been put into it because of that particular work is what has had these investors sucked into believing that there was something real there. Now, the end of the year, when Bitcoin was trading up in the high 1600s or something like that, I predicted that Bitcoin would trade as low as 4,500 this year, and now it looks like that is happening, coming into play. So there's not a lot of Bitcoin charts that are available based on the Thinkorswim platform, which is what I use here, and I'm going to stay with that right in here and show you what my analysis looks like. And I'm going to look at GBTC, the weekly pattern. I'm going to move that over to the Bitcoin future, and then I'm going to show you the Bitcoin future on the daily pattern and show you where I think we are and where I think we're going to break down and accelerate in a massive way to the downside very shortly. Let's take a look first at the GBTC, which is the Bitcoin Investment Trust. And you can see that right here. So there are just the early formations of cyclical patterns in here, and I have that on there. Now what I did was I extrapolated this and I moved that over to /BTC that you can see right over here, and there are those same patterns that we have that are because there's less information on the future. I wanted to first show you the GBTC, and this is the key level right over here. So this number right over here, these lows, that it made the low here at 58.05 at that point. It's now trading at 63.95 after having had a massive downside move. Yesterday, on Wednesday the 5th, the declines in the cryptocurrencies were between 12 and 25% on the day. Those were massive, and I think it's the beginning of this collapse that might very well be the washout for the cryptocurrencies. And we get down to maybe, under 50 that survive all of this. That would be my guess 5 years down the road. So this number of 58.05 right over there, that low that you see, is the key number. If it gets under there, that's important. Now I'm going to switch this over to the daily because you're going to see the beauty of the formations of these rhythms in the market, and there you see perfect cyclicality in there with a cycle that is a dominant and then a minor third. Yes, it's a lot like music in there. And you can see I'm just going to bring this in tighter for you to see right over there. There was some news right over here in June about the major crypto exchanges subpoenaed about manipulation, and then there's been less in the way of theft, but there is more information coming out right now about somebody that's stole like $2 million in Bitcoin. And so you can see in here the light cycles right that are marked off by that dotted line right there, and then the dominant ones right in here. So where are we right now? This rally on the future right over here from 61.90 brought it way up here to around 7,500, and now is broken down again. And you can see how close it's getting to that level right over there. 61.90 is a very important number here. It's about $200 away from the key level on this daily chart. This note here, cycle low support there, a breakdown negative, and confirms the breakdown of the weekly pattern. If it gets under 61.90 on the future, it's sayonara. It's washout time, it's collapse time, and 1,700 cryptos may start to just dwindle down in numbers very quickly as investors get, I think, cremated. This is a very key time for cryptocurrency, for Bitcoin, and I think this break under 61.90 is going to be the beginning of the massive washout. It's followed what we have believed to happen all year long, breaking down from that 1,700 some level, continuously moving to the downside. Note the 89-day moving average right over here, and that has tried to get through it here, but it's basically been a source of resistance. You could see it coming from way up there, and this is a commodity that is really in massive trouble. So again, 61.90 on the future is a breakdown that sets it up for a big decline right now, and I'm going to move in even closer for you to see. It looks like we're a day or so away from an attempted bounce. I think that bounce is the one that is likely to fail and then give you the breakdown, though it could happen in the next couple days, certainly. So total collapse going on right now, massive move down in many of the cryptocurrencies. I think Bitcoin Dark was the one that was the biggest mover to the downside, and at 25% they have all kinds of these other little cryptocurrencies that came out as spin-offs from a lot of things. It's a total hoax, a total farce. And one more interesting point is that as these things started to collapse, all of a sudden a bid came in gold. So maybe they're starting to think, well, gold's going to go up when Bitcoin goes down. I mentioned that before, that there may be that inverse correlation, and we may be seeing it now. That is Bitcoin, cryptocurrencies, and everything I'm going to show you there. I hope that you found all of this information I shared valuable, and you can write me at slim at askSlim.com and let me know what you thought. So that was a special member video. I hope you enjoyed that on my analysis on Bitcoin. Also in that video, we talked about the FANG stocks and the condition that they're in, and also talked about utilities and how there's a movement that looks like it's going to favor those for a little bit of while as investors get more conservative. You're going to want to watch all of those videos, and that is our stock sectors category. We have 8 different categories of videos that you can watch just by becoming an askSlim member. Go to our membership and you can see that in the membership tab, all of the different things that are included in all of our memberships. And all of our premium memberships include the stock index report, which is just a phenomenal report on the markets. Also follow us on Twitter at askSlim, become a subscriber on YouTube, give us a thumbs up if you like this video. Don't forget you could put comments also on the YouTube video. All right, so let's get into our best for the week. The biggest gainer was actually a rumor stock, we'll call it, and that is GameStop. We've talked about GameStop in the past, and as it was in a very negative mode for a long period of time. You can see that right here as you see those downward arrows, which are really showing you this big declining, long declining period. You're looking at 2 years right in here. And then what looks like a base being built. It kind of had a fake out right over here where it rallied and then took out that low again. And now it looks like it's getting a pretty good size rally right there. So I want you to note there are 2 scenarios in here. We have to do this sometimes when the markets are in question or a particular stock is in question. Where you have this big downward break and this big rally, it gives us a sense that there was a shift or there's another cycle at play. So there's 2 of them in here, the black one that you can see and the blue dashed one. If it gets above this level right over here at 1743, it will prove a major base being built. And don't forget, this stock right now is only a 4 PE. It's incredibly cheap. Up to this point, it's been a value trap as their business really looks like, well, it's getting a lot worse, and their execution problems are difficult. So there's a question of value versus execution, and what we see in here is a likelihood now that this is extending out, made a little later bottom, and is moving up. The rumors are, a report came that they're working on a deal to sell themselves. This is a very cheap stock, and you would bet that somebody might actually be interested. So I don't like to spread rumors, but I'm showing you a pattern that looks like it's positive. And that's why I have that alert in there to tell me when it gets above that level. So GameStop up 17% on the week, and it may be just the start based on what we're seeing in here. AMD, the next biggest gainer. Now, there were not a lot of gainers this week because the market was weak, but this one managed another 12% as it got up through that 161.8 fib extension and then started to give it up. We believe that is a significant top right around that $30 number, and the next 3 weeks or so are going to bring this corrective period. There's some support at 26.37 and then down down again here around $24. And I wouldn't be surprised to see it even maybe give up some ground, close to that $24 number. If it did, man, that is a buy area, and I would love to see that happen. So AMD up 12% on the week, really super execution by them, and that's versus poor execution by Intel. CLF is the next one we're looking at right in here. This showing you how this intermediate support zones can really hold, and also that 13-week moving average being meaningful. We think we're in for a choppy period in here, but overall this looks like a good stock. No news really, but up 10% on the week as it really likes that support area. Next one we're going to look at is AVGO, which is, you can call it Avago or you could call it Broadcom, which is in the semiconductor category. Semiconductors generally having a rough time of it. However, this one did really well on a solid earnings report, but it gets up into that sell zone right over there, and we actually think it does not have a lot more upside to go. This is a big head and shoulders top that's formed. You can see that. The measurement way down here under 160. With the prices of semiconductors really dropping and supplies growing, this is we think a fake rally, and you can see our projection in there. So very best case I can make is 200 out in December. So this is what I consider to be very bad pattern and a spot where I think it is a sell. And the last stock here in the good ones for the week is DKS. And this one, a pretty decent pattern you could see as it hits that support zone, the 34-week moving average, and then bounces up again. You see that shooting star right there? That gives us a sense that it is peaking in that fib target zone. So that was the zone we had up there as it was likely to get up to. It did make it this week. And now I think that that's probably the most you'll see in there for a while in DICS, as the investors are looking for places essentially to put money while we see this weakness growing in the technology category. We're going to talk more about that right now as we get into the worst stocks for the week. All right, for the worst stocks for the week, the all-out leader in here on the downside is a stock that we continue to bring all of the time. We've been extremely negative on it, and that is Tesla. Tesla, there is so much news coming out there, that stuff that you just would not believe. First of all, of course, of that crazy tweet that Elon Musk put out, that the stock, that they had the financing, to go private at 420, and that turned out to be a bunch of bull. Got to wonder what he was on when he said that. Well, maybe you don't have to wonder so much, because he did an internet show yesterday, on Thursday, the 6th. You might want to watch the tape in there, where he was drinking, I guess, and he was also smoking some weed. He said it was pot that was mixed in with tobacco. I saw the tape. And investors are just plain out shook up, and so are executives, because a couple of them have left the company. One of them, chief accounting officer, even as he was only been there for 1 month, saying that he had no idea how high profile this was all going to be and what he was going to be facing taking on that job. So it's a company in turmoil. Our target was originally 310 for August to September. We lowered that to 272. It broke below that number now, and now our targets are really more like 244, maybe as low as 224. I was having a discussion with some of my cohorts here at work, RV and Eric, and talking about, maybe he'll find somebody actually to buy them out. I think that may be the case, but maybe it's at 150 after the stock drops to 100. Who knows? By the time they get a grip and figure all of this out, and the board is able to oust Elon Musk, if that can happen, and they put in somebody, the stock could be too late. There's huge competition coming. That you can see that go private tweet creating that big shooting star right up over there. We said it was a sell, and it certainly was. So here's those supports right over there around 244. We're projecting it to continue lower into October right over here. So I think if you get some pops, I think it will continue with the drops after that. So ugly pattern, down 13% on the weekend there, and just a stock and a company that is imploding as they've done everything they can to try to get their production up. They're going to miss production again, and that is a bad looking chart, and it's been bad. And talk about bad looking charts, this is really bad. Like I said earlier in the show, there is, all of these finger pointing in the Department of Justice threatening new regs on these social media stocks based on them influencing the information that's coming out to favor a political party. And that's what they consider to be not, following the First Amendment of free speech. And so this is a breakdown. This is really bad. We saw this cycle in here that came down right over here, and that was really trouble. And then it breaks down. Now it looks like it declines all the way out to November, which is in line with our thinking about the stock market. It's not going to get up to that sell zone over there. We're going to have to recalculate these things now that it's breaking down. And really a horrible pattern here in Twitter. We had loved the stock. It made a lot of money for a lot of people that were following us, because I know that because they wrote us. And in this case, they have really done poorly. This one I'm proud of. The next one, proud because not only we were negative, but look at that. On 7/26, I projected in time and price between September 5th and 10th, it would get down to that level. So it was right up over here on 7/26. Where's that price? Right there approximately. And it tried to rally, failed, and then fell right down to that number as it follows the cycle patterns pretty perfectly. You can get these charts by becoming a level 4 member, and I'll send you a half price link if you want to try them out. They're for the Think or Swim platform. So that is a decline that we actually think has got another week or two to go before it then tries to bounce. You could see it there in our projection, down 7% on the week. Now, I talked about semiconductors and said that the strength in Broadcom was actually anomalous compared to the rest of the group, as there is a lot of talk about semiconductor prices. Semiconductors are a commodity, actually, and the more they can be produced versus demand, it's supply demand, then the prices then move. When you get in a situation where there is oversupply, it could be economics, it could be just sector related, then these stocks, they get hit, and we've seen that in here. First one we're going to show you is Micron, MU, which has a pattern that is extending to the downside. Now, again, I think there's only a couple of more weeks in here to this decline. You could see the cyclical patterns in here. I'll explain that to you. These are called cyclical harmonic families. There's a dominant and a minor third that's in there right there, just like music. And that third minor third is nesting with the dominant pattern here and getting ready to turn up. See that right over here and see that right over here. So we think that we're in the final stages of this decline, but we think a major top is in place. Now, this stock was on our list of best for the year. It's still up for the year. It was up giant for the year, like 50%, but nothing like that right now. And their earnings have been revised up sharply, but I have a feeling that that low 5 PE is going to be changing because of these DRAM prices, and there is really talk of a lot of weakness in DRAM prices, down over 13% on the week for Micron. Also in the same group, a little bit different group, in semiconductor materials, and we've seen Applied Material break down. I warned that the other ones were coming, and you can see that right in here in KLA 10 core. This one breaking down, if it gets under this 99.5 area, it's really in bad shape. But you can see the head and shoulders top that's formed in there. You can easily create the measurement by assuming that that neckline right over there is going to get broken. I'll just draw it in there rudimentary way, and I'm just going to duplicate that, and there's your neckline. And if I can grab this channel and then bring it down, you will see that is the measurement way down here under 80. So if this head and shoulders top breaks, then the target will be down here. We'll call it 77. KLA 10 core, a horrible looking pattern. You could see the beautiful cycle patterns in there as there is a peak in place that is very early in this pattern. See this high right over here at 122? That's what we call a left-hand translation. It peaked way on the left side of the cycle, and now it points to December before this decline is over with. That is really bad, and it shows you what they're thinking about in this category. Lam Research, LRCX, also down 7%, but that one is about a couple of weeks from a potential bottom. I might as well show you Applied Material, which was the downside leader in the category, and this one points to a decline out into late November, as this one had a real bad breakdown right there once it got under that level right there. And that was at around 44.40. It continued to move to the downside. Next support around 38. And this is a really horrible looking pattern in there. Now, we talked about the oil market being pretty weak and giving up some $2.50 for the week. The drilling stocks, which tried to make a bottom, failed, and they're really looking horrible now. I'm going to show you 4 of them. Normally save this kind of analysis for our stock sectors, but there's 4 in the group here that I think are worth looking at in the drilling category. And the first one we're going to look at is rig. I did do recently a stock sectors video back about a month ago on the whole category of energy, so that's worth taking a peek at also. Here is RIG, which is Transocean. Here's the rally in here that came and disappeared very quickly. It actually points to a decline way out here into January, so that is a pretty bad looking pattern when you look at rig, down 11% on the week. Halliburton right here, this pointing to a low. Now this dashed line right over here, that's OIH, that's the oil service. So I'm comparing the cycles in the OIH to Halliburton in here. So the OIH looks like it bottoms right over here in November. This is December. This is Halliburton in November, OIH in December, so that matches pretty closely with what we just looked at in Transocean. This is a horrible looking pattern there. It tried to make a bottom, but then absolutely could not. Diamond Offshore down about 8%. DO, another stock that tried to rally and is failing, and this actually is going to become a red zone now as it gets underneath those levels. So this right over here, I can just simply show you that it will now turn down and look like this based on breaking underneath that important level. So Diamond Offshore, really a bad one, down 8% on the week. Schlumberger, look at this collapse. It's absolutely a horrible pattern, points to a decline out into December also. So this is a horrible looking group in the drillers, and that I think is just telling you about the conditions of the energy market with a lot of supply out there, and just the threats of what's happening in Iran or Venezuela, or all of those disruptions that you might get by hurricanes. They're all just temporary. You get little blips on the upside like we did in oil last week, and I'll show you that right now as we get into the short-term view, but that's just a temporary little upside blip that we get, and I think oil's in a lot of trouble now as we get into the fall time period here. That's it for the worst of the week, and I'm going to be right back and show you our short-term view for the coming week. All right, short-term view for the coming week. I do this look at 5 major markets, show you our analysis on the daily chart, project out for a week or two, and then take an accountability of how we did in the previous week. And we're running about 65%. That's about 2 to 1 correct versus incorrect. Light crude was weaker than we thought. So it didn't quite get the rebound and fell a little deeper than we thought. So we only get partial credit for that one. As far as the dollar goes, and we did really almost perfectly on that. The same thing for the gold market, and of course the stock market, which we hit a bullseye on this week as it moved right down into the zone that we expected. So we're going to now switch over, like I said, to the daily charts. As we look at the first one, light crude. And I want you to see in here that it's come down to a support area. We thought it would actually only get down to about 69 and then bounce. And it got down lower than that. It got down over the 68 area. So let's take a little closer look here for you to see. What am I getting here? Let me just get rid of that. There we go. All right, so this pattern in here, this was we expected, a decline and then a rebound. Well, we got a decline and it started rebounding today, but not enough. So it got lower than we expected. Now, this pattern in here, the reason that we're giving this a failure, in other words, a rally and then failing, is because it exists in the right shoulder of a bigger pattern. And you can see a big head and shoulders forming right in there. So that's why we believe it's going to rally and then not be able to hold the rally. We think it's going to be a small rally for the week. Momentum is still positive, but it's weakening a little bit right now. We could see it getting up to about the 68.50 number. That's the bottom of that resistance, up to about 69.10 or so. That's the resistance zone that we think it's going to get up to and then fail. So we're going to look for that kind of a week. We think it'll probably end up to be a small up week. But I think that the risks are really picking up. And if we're right about this being a right shoulder, it will be a very deficient rally, and we're going to see prices fall a lot more. So you're going to want to check our Future Speak video on Wednesdays, where we give you the intermediate patterns also, and I'll show you what I think. This hurricane type stuff that you see, that big upside tick right over there, that happened at the end of last week, well, that's pretty typical. And when you get a failure from that resistance zone like that, that's a lot of problems. So light crude, we think, will rally and not be able to hold the rally. As far as the dollar goes, DXY, let me get that pattern up for you. There you go. We thought that the dollar would rally and then roll over. And you could see rally and then roll over. It hits the sell zone. We think it's going to get up there again because it's a little early in the pattern. So we think we're going to get an early uptick in here and then start to move back to the downside. We think the risks for the dollar are also increasing. And I think that's all a part of what we think is going to be money flowing out of the U.S., bringing weaker asset prices pretty much across the board. So dollar, we think, is going to get a little rally going on in here, and then you can see our projection likely to roll over. The reason that we believe that this will not go higher than that is because of the depth of the previous decline, which almost erased the previous rally. That makes the odds of failing in the sell zones much higher. So this is a weak pattern. We think that we're going to get an attempted rally and then end up with a down week in there, maybe small, because it'll try to rally first. Momentum in there has turned negative, and that's another reason we think there's a problem. And for those of you that follow our favorite analytical pair, the slim ribbon and the projection oscillator on the bottom, that did give a sell signal. It's about to give another one in there. So we think that upside is very minimal in here for the dollar. The gold market /GC is the next one we're going to look at. And we said last week tight range, stuck between the minor support and the resistance, and perfect call. You can see that. Now for this week, we think it's going to chop its way up. We still think there's room in here, and part of that is we think the dollar is going to rally and then roll over and do poorly. So we think that there's an empty space right in there to get a rally again. We think we're going to have in gold an up week, even though the momentum is still negative. Now, the momentum is negative, but gaining a little bit of strength in there. So, as you can see, the slim ribbon really narrowing. That's the first sign. And you can see in here that we're still oversold on the projection oscillator, so no real signal in there. What we want to do is see if it rallies and how high it can rally. We're going to call for this resistance, 1221 to 1233 is where we think we're going to get a rally up into in this coming week. We want to start to see that momentum begin to improve, and then we think that out over here, if you look out in September, late September is where we think there's a better chance of a strong rally, as we also think that's where the dollar is going to start to get really hit. Keep your eye on the Japanese yen as maybe the best trade. Now we're going to look at the bond market, /ZB, as you see right over here. Okay, what's my analysis in here? You see, it looks like I have two analyses in here, and I actually do. The reason for that is that it kind of looks to me like there's a potential for some kind of a shift going on right in here as this extends to the downside. This rally right in here and failure would actually be quite negative if that's correct. So in either case, I actually think that after this decline, we're going to get an attempted bounce in here, and then we're going to have to see how that bounce does. I don't think we're just under that support, and I have a feeling it's going to at least give a bounce to the upside this week, especially since I think there's more downside in the stock market, which I'm going to show you. Fed heads are out there, really talking rate increases, and this really looks to me like that's what's weighing on the market right now, plus the strong employment number and strong wage numbers, all of that weighing on the bond market. But if the stock market goes down, it's going to be hard for the bond market to decline unless the bond market is leading the way on the downside. Well, it is today, so we're going to see whether or not that can continue. Our guess is that it rallies, has a minor rally up in here, tests 143.08 to 143.22. That's the top of that support zone right up over there, and then we think it's not going to be able to do a whole lot better than that. So for those of you looking for short side entries, if you believe this downside scenario, I think it's coming potentially in a few days. If it breaks out above that cycle peak resistance that you can see right up over there, that then heals it and the positive scenarios in place. The intermediate patterns say it's not time yet for a big rally, so that's why we kind of think it's going to be just more stuck in this range right over here that we see with an attempted rally this week. That is a look at the bond market. Stock market, S&P 500. So again, we had a couple different scenarios in here, which was RV cycle, the green one right over here, and the cycle that I thought was in play, which was the dark blue dashed one right over there with the half cycles visible. And we're both right at this point because we said that both of those were turning down and the market was likely to move lower. Our target for the week was 28.73 to 28.60, and you could see the low here today for the week is 28.73. So I'm sorry, the low for the week is 28.64. So that is almost getting perfectly down to that zone. Now we're still in an area of risk. We had this note in here that risk increases, and you can see that. So we think it's going to be a down week again. We're looking at this 28.45 number as a likely downside target sometime over the next 3 to 5 sessions. So we think that rallies will continue to fail. We've had a number of them this week, and they have continued to fail, and we think that sellers have now come back into the market, and that this is just the beginning of the topping process. You could see our projections out here as we go further out into September, and that late September through November, December to us looks like much higher risks. In that period where I talked about significant corrections, I think are coming in there. And for those of you, again, that want to see our weekly analysis, you want to watch futures speak, and you'll be able to see that. Now, momentum's still strong in here. We talked about that last week, that it was likely to keep the market from going into a real strong downside. That's why we thought that support would hold. We still think this support area is going to hold right now, and we still think the momentum is not breaking down. All of our other indicators that we look at, for those of you that are members, are option bias indicators sitting at P3, the highest rating, and our market conditions indicators all just giving a little bit of ground from the 90s down into the 80s, which is still extremely strong readings. That's out of 100. So those are shorter term internals. They're not breaking down yet. We still think that it's going to keep the market from collapsing for a while. And for just this week, we're going to look for a continued modest correction or small correction to the downside, with risks picking up later. That's it. I hope there was some great information for you throughout this show. I hope that you thought that Bitcoin bit that we did there was interesting. I don't do that analysis very often, but certainly I think it was telling. And if we get underneath that breakdown level, I think a collapse is coming, as if it hasn't already happened, as like $100 billion has disappeared out over there. So the cryptocurrency, just total farce. That's it. Write me at slim@askSlim.com if you'd like to get our trial memberships. You're going to love our stock index report. And write to Matt at askSlim.com if you wish to get a sample of that. No cost to you at all. I will see you next week. Of course, I want you to be extremely careful because it is so crazy out there. We're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been